The US dollar has been the global reserve currency since the 1940s, but that system is rapidly changing. Countries all across the planet are seeking alternatives to the US dollar in a global movement that is referred to as de-dollarization. There are so many examples. For instance, China and Brazil are trading using their local currencies. China and Russia have already de-dollarized more than 90% of their bilateral trade. Iran and Russia are also using their local currencies in bilateral trade. China has bought liquefied natural gas from the United Arab Emirates using its own currency, the renminbi, also known as yuan. The African continent has created a new system that's known as the Pan-African Payment and Settlement System, which will allow African countries to settle cross-border trade using their own local currencies, bypassing the US dollar. The countries of Southeast Asia in ASEAN have also created a system for cross-border payments using local currencies, which reduces their dependence on the US dollar. And in June, even longtime US ally Saudi Arabia joined in these de-dollarization efforts. Saudi Arabia's central bank officially joined the mBridge system, which is a system connecting the central banks of China, the United Arab Emirates, and Thailand, and now Saudi Arabia. And the central banks can use CBDCs, central bank digital currencies, in order to settle trade imbalances without the need for US dollars. And even more striking was a trip that Russian President Vladimir Putin took to North Korea in June. He met with the North Korean leader Kim Jong-un, and in an article that Putin published in a North Korean newspaper, he said that Pyongyang and Moscow will, quote, develop an alternative settlement system that is not controlled by the West, and together they will jointly oppose illegitimate Western sanctions. So pretty much everywhere you look, from Latin America to Africa to Asia to Eastern Europe, we see attempts to create alternative payment systems, deals being signed to de-dollarize trade, and central banks holding other assets, not just US dollars. Everywhere you look, you can see de-dollarization, and this is now being acknowledged even by US-dominated financial institutions like the International Monetary Fund, the IMF, and even the US Central Bank, the Federal Reserve, has reluctantly admitted that de-dollarization is happening. Today, I'll be looking at some of these statements from Fed officials. But first, I want to analyze a research paper that was published by the IMF in June that shows how US dollar dominance is declining. This research paper noted a, quote, ongoing gradual decline in the dollar's share of allocated foreign reserves of central banks and governments. Strikingly, the reduced role of the US dollar over the last 2 decades has not been matched by increases in the shares of the other big four currencies, that is, the euro, yen, and pound. Instead, what we've seen is a diversification of the assets held by central banks around the world. Not only are they holding so-called non-traditional currencies from other countries, but they're also significantly increasing their holdings of gold. Now, what's important about this IMF research paper is that it has 2 different charts, one of which is more useful than the other. Now, the chart I'm looking at here is not that useful because what it does is it shows the currency share of foreign exchange reserves of central banks around the world, but it uses market exchange rates, so it makes it look like the dollar share of central bank reserves is larger than it actually is. According to this chart, the dollar's share in global foreign reserves has decreased from a bit over 70% in 2000 to now under 60% as of 2022. However, this is a bit misleading. In 2022 and 2023, the US Central Bank, the Federal Reserve, significantly raised interest rates, which meant that the US dollar significantly increased in value against other currencies. And many economists say today that the US dollar is overvalued, which makes it seem stronger than it actually is. And that means that if you don't adjust for the exchange rate, it looks like the dollar's share of foreign reserves is higher than it actually is, higher than the purchasing power of the dollar is. When you adjust for exchange rates of different currencies, you can actually see, as is shown in the other chart in this IMF paper, that the dollar's weighted share of global foreign exchange reserves has fallen from a bit over 70% in 2000 to just around 55% as of 2022. And in 2023 and 2024, the dollar share fell even further. So the article points out how it's important to keep in mind exchange rate fluctuations that can have an independent impact on the currency composition of central bank reserve portfolios. And it emphasized that this recent trend of de-dollarization is all the more striking given the dollar's strength. So given that the dollar has become stronger because of rising interest rates, you would think that the dollar's share of foreign exchange reserves would increase, but it has continued decreasing because, again, this is not only being driven by the strength of the dollar, this is geopolitical, not simply the result of market forces. In this IMF paper, the economists acknowledge this. They point out that some analysts have suggested that what we have characterized as an ongoing decline in dollar holdings and the rise in the reserve share of non-traditional currencies, in fact, reflects the behavior of a handful of large reserve holders, like Russia, for instance, which has geopolitical reasons to de-dollarize because of Western sanctions and because the US and the EU froze $300 billion in euros worth of the Russian central bank's reserves. However, this research from the IMF shows that even when you exclude countries like Russia and Switzerland from the aggregate data, using data published by central banks, we still find little change in the overall trend of de-dollarization. And as the IMF economist said, quote, "This movement is quite broad." They identified 46 different central banks around the world that are actively diversifying their reserves. So it's not just Russia and a few allies. They referred to this as, the IMF economists refer to this as a broad-based shift. The falling dollar share is evident even after the removal of large reserve holders, showing that the shift is broad-based. The IMF economists also found that financial sanctions have induced central banks to shift their reserve portfolios modestly away from currencies in favor of gold. What does that mean in simple English? It means that as the US imposes more sanctions on countries around the world, not just the sanctioned countries, but in general, central banks are moving toward gold and dropping their holdings not only of dollars, but of currencies in general. So gold is becoming more important in the reserves held by central banks around the world. And although it's still at a relatively low level compared to, for instance, the 1960s, which was the peak, it can very quickly reach that level, and it is accelerating. And the Financial Times acknowledged this in a report published in June titled, "Rich Countries Plan to Buy More Gold Despite Record Price." Now, this report is very important because it shows that it's not just developing countries in the global south that are targeted by Western sanctions, but even the wealthy countries in the global north, the colonial countries, even they are buying more and more gold in their central bank reserves. This report notes that almost 60% of rich countries' central banks believe that gold's share of global reserves will rise in the next 5 years. That is up from just 38% in 2023. It's a massive increase in just 1 year. Furthermore, 13% of advanced economies plan to increase their gold holdings in the next 5 years, up from 8% the year before. And they're following the lead of emerging market central banks, that is in the global south. A rising proportion of advanced economies, 56%, up from 46% in the previous year, think the dollar's share of global reserves will fall. Now, again, I need to stress how important this is, because this is a poll not only of the countries in the global south, the formerly colonized countries, which are de-dollarizing much more quickly, obviously, because they're afraid of Western sanctions, but even the wealthy central banks in the rich colonizing countries, they are also de-dollarizing and adopting more gold. This report quotes a financial analyst who said, quote, "It's not just the emerging market economies evaluating these factors less, but advanced markets catching up to how emerging markets feel about gold." And the Financial Times notes that a record share of central banks since the survey began 5 years intend to increase their gold reserves over the next 12 months. 29% of central banks plan to buy more gold. And in emerging markets, nearly 40% of central banks plan to buy more gold. And one of the reasons for this is, of course, U.S. sanctions on Russia's dollar-denominated assets and also euro-denominated assets prompted a rush among non-Western official financial institutions for gold. The dollar's share of global foreign exchange reserves, excluding gold, has plummeted from more than 70% in 2000 to around 55% as of 2023, and they cited the IMF study. However, we should keep in mind that these statistics only look at the dollar's share of currencies in foreign exchange reserves. If you also include gold in the reserves of central banks, you can now see that the US dollar's share of global reserves has dropped to below 50%, below half. This is a very important detail because when you look at most of this data, even in this IMF study, it's looking at the US dollar's share of foreign exchange reserves in terms of currencies. But what we see is that central banks are not only diversifying the holdings of currencies that they have in their reserves, but they're also buying gold. So de-dollarization is happening quickly. And even the US Central Bank, the Federal Reserve, has reluctantly acknowledged this. In May, the Fed held a conference on the international role of the US dollar. This conference featured remarks by Christopher Waller, who is a member of the Board of Governors of the Federal Reserve System, and he was previously the Executive Vice President and Director of Research at the St. Louis Fed. Here is a clip of these remarks by a top Fed official in which he acknowledges that there are growing challenges to the dominance of the US dollar, and in particular, he mentioned some of the geo-economic challenges.
While recognizing that the US dollar may face some challenges to its dominance in the future, we as policymakers are also attuned to the potential financial stability challenges the current broad use of the US dollar can pose for financial systems in the United States and the rest of the world. For instance, one of those challenges is the complex relationship between the dollar and geoeconomics, commonly defined as the interplay between economic and geopolitical tools and objectives. Rising geopolitical tensions, sanctions against Russia, China's efforts to bolster usage of the renminbi, and economic fragmentation all can affect the international use of the dollar, most visibly as a store of value and reflected in its use in official foreign exchange reserves. These same factors can also affect the dollar's role as a medium of exchange, for example, with its use in trade invoicing, global banking, international debt issuance, and foreign exchange transactions.
Now, this Fed official, Christopher Waller, made similar remarks back in February in a speech at a conference, and the transcript of this was posted also on the Fed website. He noted that, quote, "Recent commentary warning of a possible decline in the status of the US dollar raises concerns about the effects of sanctions against Russia, US political dysfunction, the rise of digital assets, and China's efforts to bolster usage of the renminbi. Other commentary has warned of geoeconomic fragmentation. Of course, this official works at the Fed. His role is to defend the US dollar, and in this speech, he did try to downplay some of these criticisms and argue that the dollar is in a better position than many people think. He did acknowledge, however, that going forward, there are potential challenges to the dollar's international status, and some recent developments have the potential to boost the international use of other currencies. One of those is, he acknowledged, the growth of digital currencies, in particular central bank digital currencies. He was very skeptical of cryptocurrencies and Bitcoin because he pointed out that most trading in so-called decentralized finance involved trade using stable coins, which link their value one-to-one to the US dollar. And that's because so-called cryptocurrencies are not actually currencies. They are speculative financial assets that are used, for instance, as inflation hedges, but they are not currencies. And data from multiple countries shows that at most 2% of people use crypto to actually buy goods and services. That is to say, 98% of people simply speculate on Bitcoin and other so-called cryptocurrencies, which are not currencies, because the reason that they hold them is as speculative investments. They want to get richer, and Bitcoin is always measured in US dollars. It is not an alternative to the US dollar. And the fact that the Wall Street investment company BlackRock, which is the world's biggest asset manager, now manages the biggest Bitcoin fund on earth, a $20 billion exchange-traded fund and ETF for Bitcoin, this demonstrates that Bitcoin is not an alternative to the US dollar. It is not a currency. It is a financial asset. And investment banks and asset managers on Wall Street can clearly see that, and they are buying up Bitcoin on behalf of their wealthy clients, not because they think it's going to challenge the US dollar. The exact opposite. So I just want to make that very clear. And the Federal Reserve itself is not afraid of crypto, as you can see in these comments. What the Federal Reserve is afraid of is foreign central bank digital currencies, especially in an initiative led by China. In fact, Bloomberg published an article warning that China's central bank, the People's Bank of China, is helping to de-dollarize through its use of central bank digital currencies in the mBridge system, which connects the central banks of China, Thailand, the UAE, and now Saudi Arabia. As of June, Saudi Arabia has also joined this system, which means that China will probably increasingly be able to buy oil and gas from Saudi Arabia and the UAE and settle trade imbalances not in US dollars, but in yuan, in China's currency, the renminbi. So that was why in this speech, this top Fed official was not concerned about crypto challenging the dominance of the US dollar. It is not challenging the dollar, but foreign central banks like China's PBOC using CBDCs, that actually does challenge dollar hegemony. Furthermore, he noted in this speech, again, this is a top Fed official speaking, the continued rapid growth of China and Chinese efforts to boost the use of their currency could make the Chinese renminbi a more attractive competitor to the dollar and increase its international uses. He points out that China reached an agreement with Brazil to allow Chinese and Brazilian companies to settle trade in their domestic currencies. There is discussion between China and Saudi Arabia to potentially price oil trade in renminbi. He added that sanctions imposed by the United States and its allies on Russia could make the dollar less attractive as a reserve currency for the United States' geopolitical adversaries. And he talked about geoeconomic fragmentation and the potential formation of a bloc that excludes the US or even explicitly seeks to counter the US role in the global economy, which could make some countries less likely to denominate international transactions in dollars. But again, as I said, this official speaking works for the Fed. His goal is to defend the dollar system. So despite acknowledging all of those details, he concluded his speech saying, quote, I do not expect to see the US dollar lose its status as the world's reserve currency anytime soon, nor even see a significant decline in its primacy in trade and finance. So this is what, the Fed's line is. They're acknowledging that de-dollarization is happening, but they're saying, well, it's slow and it's not significant. We saw another example of this in May when the New York Fed published a research paper which acknowledged that de-dollarization is happening. However, as the New York Fed wrote in a tweet, they claim that the narrative of de-dollarization, quote, inappropriately generalizes the actions of a small group of countries. So let's take a look at this research paper published by the Federal Reserve Bank of New York on its blog, Liberty Street Economics. It notes that some market participants have linked the apparent increase in official demand for gold in recent years to a desire to diversify away from the US dollar, that is de-dollarization. However, these Fed economists, they question these narratives, arguing that these observed aggregate trends largely reflect the behavior of a small number of countries. The Fed research paper notes that central banks have significantly increased their gold purchases since the 2008 North Atlantic financial crisis. And especially in 2022 and 2023, there's been a massive increase in gold purchases by central banks. And if you look at the chart that the Fed economists included in this paper, you can see it is a very significant increase. The Fed economists attribute this massive increase in gold purchases to three different reasons: an inflation hedge, a risk hedge, and a sanctions hedge. So obviously there was a lot of inflation after coming out of the pandemic. There were supply chain disruptions. And furthermore, risk has increased because of geopolitical tensions. And of course, Western sanctions have significantly increased. So the Fed economists note that gold's seeming safety from sanctions has been widely viewed as a particularly salient factor behind official gold purchases. They note, we find that countries that are geopolitically less aligned with the US, as proxied with their voting agreement with the US in the United Nations, have tended to be the largest gold purchasers in recent years. However, the Fed economists were once again skeptical of de-dollarization. Their job is to defend the dollar. And they pointed out that the ratio of gold to official foreign exchange reserves still remains low. And they wrote in the conclusion, quote, our research suggests that the narrative about declining dollar shares in official reserves and increasing roles for gold holdings by central banks inappropriately generalize the actions of a small group of countries. However, I have to point out that it was the IMF paper that I began this analysis with today that showed the opposite. The IMF economists referred to this shift away from dollars, diversifying reserves, and also buying gold. The IMF economists referred to this as a, quote, broad-based shift. They pointed out that even when you remove certain central banks, like the Central Bank of Russia, from the data, it's still an overall trend. The IMF economists refer to this de-dollarization movement as broad, and they identified 46 central banks. This is not just Russia and China and a few of their allies. Moreover, the report that I looked at from the Financial Times also reveals that the central banks in the rich countries in the global north, the countries that colonize the global south, even many of their central banks are also considering buying gold, and they believe that the dollar's share of foreign exchange reserves will fall. And they're the ones determining what the total share of reserves are because they manage central bank reserves. We're talking about polls of central bankers. So the research does conclusively show that de-dollarization is happening, and it's happening at an increasing, accelerating pace. There's still a lot more that I could add, but in order to prevent this from being super long, I'm going to conclude here. And of course, in the future, we here at Geopolitical Economy Report will be doing much more coverage of de-dollarization. It's a very important issue to understand. I am Ben Norton, the editor-in-chief of Geopolitical Economy Report. I want to thank everyone for joining me today. Please like and subscribe. Please share this. and I will be back soon. See you all next time.